Okay, listen. 6 months from now, you're gonna look back and remember this video for one of two reasons. Either you'll be thankful you listened to it, or you'll regret not watching it all the way through. Because what I'm about to lay out in this video is gonna make or break your portfolio. This is the difference between walking away from this bull cycle with millions or watching your entire portfolio evaporate in front of you. If you don't think something like that can happen, it will. Take it from someone who has been through the cycles before. With Bitcoin hitting all-time high after all-time high, we're seeing more and more liquidity flow into the crypto markets. Once we start to see that trickle down into large cap altcoins, that's when we'll see the coveted altcoin season finally start showing some spark. But here's my warning. For whatever reason, those market rips tend to always happen when we're least expecting it. So the last thing I want to see is you getting caught off guard when the market starts pumping. Then you say, I'll wait for it to correct back down and then buy the dip. Then as it continues to pump, the FOMO hits and you end up top blasting in fear of being left behind. That's why it's so important to get your strategy in order right now before shit hits the fan. Let's be real. The truth is that most crypto investors end up round tripping most of their gains that they make in a bull run. Not because they're dumb, but because they don't have a solid exit plan in place. If you're just going off emotion and not strategy, then you're pretty much just completely gambling. And if you don't think we're in the calm before the storm, just look at the type of news we're getting. We got senators constantly pushing new crypto Bitcoin legislation, the largest banks, governments, and hedge funds in the world fighting for their share of the crypto market, and the US government and the SEC have both shifted into the heavily pro-crypto side of the scale. But before we start, it's important to stay ahead of news like this in crypto, and every minute counts when you're basically competing against other traders. That's why I think you would benefit from something like the FireHustle VIP Discord. I share all of my alpha, market research, updates, and more here. Not only that, but you'll gain access to portfolio reviews, exclusive VC deals, alerts on my portfolio buy and sells, early videos, and tons more. So if you're interested, come and try it out for a month at wap.com/FireHustle, and I hope to see you over there. Now back to the exit strategies. So let's kick it off with the most beginner-friendly strategy, dollar cost averaging out, or DCAing. So you've probably heard me explain DCA for buying, but now it's time to flip the script and use it for selling. The idea is pretty simple. Instead of selling your entire holdings of a coin at once, split those sales into chunks and sell gradually, either based on time or percentage. For example, instead of full selling your holdings at 10,000 XRP tokens, you can sell 10 orders of 1,000 tokens each across the span of 10 weeks. There's a few benefits to this method. For one, you're not panic selling when the price dips slightly, which is a move you might end up regretting. And at the same time, you're not stuck trying to time a perfect exit during a parabolic run. And yeah, you'll still catch yourself doing the math and thinking, what if I held everything and sold it at the very peak that lasted for 13 seconds? Then I would have made 3x more profit. Let that go. Selling the exact top is like winning the lottery. Don't aim for it. Don't expect it. Just stick to the strategy. Now, the next method is laddering out. This is pretty similar to DCA, but with more precision. Instead of selling on a schedule or based on percentage gains, you preset exact price targets. So say you bought a coin at $2 and believe it can hit $20. You might sell 30% at $10, another 30% at $15, and the rest at $20. This works best if you've done technical analysis or have a thesis to support your decision in holding the coin. And as a bonus, you can even automate this on most exchanges using limit sell orders. So you don't have to babysit your portfolio during 3 a.m. pump candles. And if you're not sure which exchange to get started with or the difference between things like spot trading or futures trading, then you might want to pay attention. I'm going to quickly talk about how some traders are making serious money in crypto. People always hit me up like, Summer, how do I level up my trading game? And here's the deal. Spot trading is fine for beginners, but if you want to play with the big dogs, futures trading is where it's at. It's all about leveraging market swings up or down to stack those gains. But you need a platform that's fast, reliable, and doesn't nickel and dime you on fees. My go-to is Margex. It's a beast for futures trading, built for traders who mean business. No KYC required, no VPN hassles, and it's open to traders in many countries worldwide. Margex gives you over 40 trading pairs, including heavyweights like Bitcoin, ETH, and Solana, with up to 100x leverage to amplify your possessions. The fee is dirt cheap. 0.02% for makers and 0.06% for takers on futures, which leaves more profits in your pocket. The platform's slick with lightning fast execution and an AI-powered MP shield to keep shady price manipulation in check. Plus, you can go long or short, so you're making money whether the market's booming or tanking. Here's the kicker. Sign up with my link below, deposit up to $10,000, and you can claim a 20% bonus, which you can use to slash trading fees and keep more of your wins. Margex is also running a 1,000 USDT event for the first 20 users who open a trade. Every additional million in volume adds $100 to the pool, so 5 million volume means $1,500 to split. I've got a dozen accounts across exchanges to stay flexible, but Margex is my futures trading home base. It's that good. Check out the link in the description to learn more. Now back to the video. So laddering out is especially useful in bull markets where prices shoot up so fast that hesitation leads to missed exits. You still ride the upside while locking in gains. Now for the next strategy, this one is more for the short term. It's called pulling your initial or playing with house money. This one's especially useful for those riskier plays like low cap meme coins and pump fund trench coins. And here's how it works. After you invest in a coin, aim for a 2x. Once that happens and your investment has doubled, you take out the full amount that you invested in the coin and let the profits ride. For example, if you put $500 and it grows to $1,000, you sell $500 and now you've secured your capital and are just playing with profits or house money. This strategy is going to help avoid making bad decisions under stress since you've already secured your initial investment. But you're still in the game if the coin keeps running. Plus, you've now freed up cash to rotate into other opportunities. Of course, in order for this strategy to work, you need to get a 100% gain on your investment, which obviously isn't always guaranteed. Now, as an honorable mention, I'm gonna also mention the absolutely worst possible exit strategy, and that's holding everything and selling at the very peak of the bull run to make the most money. This strategy only works if you have a crystal ball, and many have tried it with the belief that they would be able to tell when the bull run is at the peak, but getting this right is as rare as winning the lottery. So I do not suggest this method. But at the same time, that doesn't mean you're completely in the dark on where we might be standing in the crypto cycle. There's a few top signals that I think you should keep your eye on. First is when Bitcoin dominance is below 45%. So we all know that when Bitcoin dominance drops significantly, it begins to mark the start of altcoin season. But as it continues to drop, it almost acts like a timer for the bull cycle. This metric measures how much of the total crypto market cap is held by Bitcoin, and when dominance plunges, it means altcoins are flying, retail is fully exposed, and greed levels are climbing. Looking back at the 2017 and 2021 bull runs, BTC dominance dipping below 45% was one of the final warning signs before a major market collapse. So that's definitely something you should keep your eye on. Another major indicator is the M2 money supply falling flat. Believe it or not, crypto doesn't just run on vibes, it runs on liquidity. And that can be measured by looking at global M2, the total liquid money supply. When M2 is rising, it means that there's overall more liquidity in the markets and people have access to more money to ultimately put into crypto coins. But just like the bull and bear cycles, there's a liquidity cycle too, meaning it has its highs and lows. And once M2 peaks and starts to flatten, you could think of it like another countdown. It's a sign that liquidity is starting to dry up, and after a while, it'll have its effect on the crypto market. It's simple. Lower global liquidity means less money in crypto, which means lower market caps for all the coins in your portfolio. Then of course you have things like the fear and greed index giving you an idea on how the average investor might be feeling about the markets. And remember, when greed is at an all-time high, it might be your sign to be fearful. There's also indicators like crypto apps reaching the top ranks in the app store, family and friends that usually don't care about crypto suddenly asking you about it, and the absolute scariest sign, you taking a screenshot of your gains. That might bring us to the most valuable piece of advice in this video. If it's worth screenshotting, then it's worth taking profits on. And that's all, folks. Don't forget to hit that like button, subscribe, and turn on post notifications to stay in the loop with me. And remember, if you want to check out some of my early plays, then it's definitely worth joining my VIP Discord with the link in the description below. As always, none of what I share is financial advice. It's important to do your own research and only invest what you're willing to lose. Thanks for watching, and I'll see you in the next one.